Hey, what's up, guys? Sorry, no music right now. I'm prepping with Kyle, but no music right now. We'll be on in like a minute. All right, what's up, guys? Good to see everyone. We got a little bit of a special episode here. So I asked you guys who you want to see on the stream. You guys said Kyle, so we're doing Kyle first. If you guys like this, we can bring some more people on. Just gonna run through everybody real quick. What's up, Offshore Miner? What's up, Get Robs? Barb, Jillian, Async, good to see you. What's up, Andy? AR Perez, B Team Crypto, Gear, what's going on? Carbs, welcome to the stream, man. This is the first time I've seen you. What's up, Henderson? What's up, DJ? Zaid, good to see you. What's up, 360? What's up, Pelange? Alex, good to see you, brother. 33, Bull Runner. All right, guys. So I got Kyle with me. We're gonna shoot the shit. He might tell you a little bit about himself, and then we're gonna talk about some charts, and we'll take some requests. So first, I'm gonna let Kyle introduce himself. So let me make sure I got this set up correctly. All right, awesome. Yeah,
Check, check.
Kyle, go ahead.
What's up, guys? Yeah. So yeah, thanks, man. So basically, yeah, I've been trading since 2019. I've been profitable since like 2020. I did every single mistake you could possibly think of as a trader. I, I, jumped in no stop loss trading for probably the first like 3 or 4 months of trading. I was trading without a stop loss. So I felt like a god because I wasn't losing until the day where you lose your trade as a martingale trader, where you pretty much lose like almost your entire account. I lost like half my account from like the COVID crash. Um, Learned a lot from that. Didn't let it defeat me. Um, but yeah, I was able to scale my way up from that moment after I figured out the ropes from a $26 account to 15,000, brought it down to 8,000, brought it back up to 15,000. And then from there, I brought it up to 40 Bitcoin. And honestly, it's completely changed my life. Trading is insane. Like you can kind of work. I would love to say you work at your own schedule, but really it's not up to you. It's up to the market. And you can build your own rules, and those rules will give you conditions that will tell you how frequent you're going to be trading or um, how long you could be in a trade for on average, a whole bunch of factors. And when I finally figured out my strategy, I just went all in on this, and then basically built a community. And well, the community kind of built itself. Like I didn't build investor share. The community kind of like built it themselves, honestly. But yeah, you got. I love your community too, man. They're super nice. I get messages from them once in a while asking for some help, and honestly they have awesome energy. I'm looking at the chat. I got your chat popped out and just seeing them all on your YouTube live here. What's up, guys? I got Alex of Crypto in here too. Jillian, what's up? How you guys doing? Got Mark. Mark is everywhere, man. Mark Dutch. How you doing, man? Tradefly. Got the whole crew here. I'm actually waiting for a short right now as we speak. Um, we just hit supply. Waiting for the 15-minute break of the low. We just had an SFP. So if we get that close below 86,150, I'll likely be jumping into a short and targeting like around 84.5K, maybe lower. You got HRJ trading here too. But yeah, that's that's pretty much it, man. My story is not that crazy. I just did the grind, stayed up till like 2 o'clock in the morning sometimes, maybe later, trying to figure this stuff out until the day I was able to quit my job and do this for a living.
Well, that's awesome, man.
Oh,
I know that definitely inspires people. Like we were prepping for this stream, and the main question I got, everyone wanted to know was, did you really start with $27 and turn it into 20 Bitcoin? So you're definitely an inspiration to people. So that's pretty
oh,
cool.
that's if you went further back than the $26, I technically started with like 1,500, but I put it all into a scam.
It
That's actually what
happens.
brought me into crypto. It's a scam, just like everything else, really. Um, for most people, that's usually what brings them in. But yeah, there's this amazing opportunity for 3% per day, and I uh, I jumped in on it because I just did the basic compounding math, and I was like, damn, I could be rich if I just compounded every single return I got from this. And then the final payout that I got from them was $26 and like 50 cents or something like that. And I just used that to trade my way up. And I honestly, the gains at the start were just absolutely dreadful. Like you're making like 27 cents trying to gain 50 cents. Um, and not like, luckily, Bitcoin at the time was only worth around $8,000. So you only needed like $8 worth of volume to jump into a trade. Whereas today you need like today's price, you need about $86 worth of volume to jump in a trade. So I was able to jump in on Bitcoin, and I I bet the main thing that the big turning point for me was back testing, was figuring out like learning what back testing was, how to back test properly, and how to use it as a tool to keep yourself from losing in a live environment, and figuring out what works and what doesn't, and why, getting the probabilities up, like understanding the probabilities of a setup helps rip out the emotion. And if you can take the emotion out of trading, then you won't be jumping into trades or leaving trades like based on emotional decisions, and you're just doing it based on probability, and just allow yourself to properly scale. Um, but yeah, I did start with, technically as a trader, I started with $26. As an investor, I started with 1,500, but unfortunately, all that was in a scam.
Yeah, man. Yeah, emotions will wreck you. Like that's why I love structure so much because I can just set the trade and forget it. Because if you're sitting there trying to micromanage it, the market makers will
Yeah,
definitely get you feeling like you're right and wrong every 2 seconds. So sure, a lot
there's
of people
definitely
can
a
relate to
time
that.
for micromanagement, but that's you should set alarms for those key areas. So, like you said, you don't micromanage the in between stuff that shouldn't really happen or matter. So just like you would have like a key level you would mark to prepare for an entry, you should have a key level that acts like a barrier towards your technical target, to allow you to know like, okay, if we had a reaction here before hitting my target, I should listen to the market and potentially get out with at least some of my capital, so you can protect your gains as much as you can.
Yeah,
But
something that that I like to do a lot is ask myself, am I getting out of this because of a structural reason or because you're scared of making money? Like that's what I teach people, or scared
yeah,
of losing money. And it's like if you get a opposing break of structure at a key level, then yeah, maybe you should make a decision. But if you just see like a big green candle, you're probably not making the right decision.
yeah, yeah. You should be FOMOing out of a trade when you see a giant candle, even if it's in your favor, right? If it's in your
Yeah,
favor, then
yeah.
you should be prepared for a stronger pullback when you see like a stronger pump or move in your direction. Um, I got complaints on my audio. So one sec here. I'm just gonna
Oh,
fix that
your
real
audio's low.
quick.
I can fix that. Try it now.
Check. 1, 2. How are you guys doing? Oh, Gear's the broke Batman. Nice. How you got? I'm just checking the chat here. Um, I don't understand what you mean by $86 of volume to enter a Bitcoin trade. So, this is a thing that most people don't realize. The amount of when you're trading a futures environment and not a spot environment, you have to contribute a certain amount of volume to be allowed to enter the trade. So what you do, it's a quick math trick, is you take the value of the asset and you divide it by 1,000, and then that is how much volume you need to contribute in order for you to be allowed to enter that trade. If you jump in with less than that, then you'll see a pop up usually on, I would say, I don't know, most of the 90% of the actual proper exchanges out there, they will say you cannot enter the trade because of lack of volume or some kind of error message. Um, just to answer your question there. But yeah, how's the audio now, guys? Is that better? Okay, cool. It's better. Nice.
All right, cool. So maybe we can talk. I know we can jump into Bitcoin here, and we can start with the question that everybody wants to know because I know that you are big on-chain indicators and
Oh yeah.
calling the top with that. So if you want to kind of go through your thing, in your opinion, do you think the cycle's over?
No, no. I think based on like the structure, it looks scary. I understand the structure right now is telling people like prepare for a bear market, and the news obviously is going to enhance that emotion too. And that's the purpose of news. It's the clicks, guys, it's the emotion. But on chain, it's showing us that the bull market isn't ending, but it's evolving. And but the problem with the evolution is that a lot of retail is leaving, and institutions kind of just like taking over. So you can get a line graph showing you the accumulation of retail versus institutions, and now we can see that there's more institutional ownership over Bitcoin than there is retail ownership, which kind of sucks because like I think of Bitcoin in the way where it's kind of like freedom against that kind of stuff. But if we, for anyone who's retail who's holding while institutions are buying, then you can just use them as a tool to exit and use their liquidity. You know what I mean? But one thing that I like about on-chain data is that it allows you kind of to determine the tops and the bottoms based on the exhaustion of the market, how much people are holding at a profit, how much are people holding at a loss. Um, the You can tie that with the fear and greed index. They usually correlate really well. Um, Except the fear and greed index is a lot more sensitive. And yeah, so I use a combination of 4 rules when it comes to on-chain analytics. The Newport charts is a big one. Net unrealized profits and losses is kind of like my macro guide before looking at the other stuff, right? Before I look at the other rules, the Newport chart is usually the one that has to be met first. Um, Otherwise, the conditions of the other ones are not meaningless. But for example, the supply being 100% in a profit, obviously that's scary, bearish, and we should prepare for moves down. But the Newport chart kind of shows you how much people are in a profit relative to the time they bought, and it grabs all the addresses and it consolidates that information so we can kind of look in on other people's wallets as a collective, and it tells us like how much we're overheated or um, if we're oversold and stuff like that. And right now, if you combine all the information together, it suggests that we're kind of only like halfway there based on today's price. Um, and based on like the Newport chart right now, our next exhaustive point, but not the overheated level, is at like 160K. And for us to like be overheated, if we had like a green candle, like a giant green candle that appeared in front of us today, it would need to get to like $220,000 for us to be overheated. And with the constant manipulation that we're seeing on the charts too, it's suppressing that exhaustive state. So the more we consolidate, the more retail tends to leave. People get bored, they throw it into alts, then they lose it all to a scam. But like, um, yeah, the more we consolidate, the higher Bitcoin could technically go. Like we never ever seen Bitcoin consolidate like this above an all-time high, like a previous all-time high, and it's reflecting in a really cool, unique way in the on-chain data. I kind of talked about the on-chain data so much that I feel like a broken record, but it's just because I want to like drill it into people's heads to help them like manage their emotions as a holder, right? Because people will see this pullback from 125K and think it's the end of the world. But we've had 30% corrections 3 times since we got the new all-time high. And this one's kind of no different, except how um, a lot of the big gainers, the people that were holding with a large gain, sold during the most recent correction. And it had a really cool impact over the Newport chart for a better reset. So I'm actually, despite the giant pullback, I am super bullish. And I'm actually kind of hoping for it to go down like another $6,000 first before we start to go back up, like sweep the most recent low, so that our market structure will evolve, so we can get our daily change of character at a much lower level. Because right now it's at like 107K, and I'd rather it be at the 93K level instead. So if we sweep that low, we'll have more trade participants jumping in on longs when we break 93K. But if we don't sweep that low, then I can see us getting exhausted prior to that and end up using it as a more more of a barrier than something that could help us get a continuation.
Yeah, I
That makes
agree
sense.
with you. I think that if we sweep the low, that would be so much better for structure, especially since I mean, the SFP on the 4 hour and the 12 hour. I don't necessarily think
Oh
it's
yeah.
that bad if it's just a 12 hour break at 93, but at this point, yeah, it's not looking that good, especially with how the 1 hour looks right now. I know you said you were looking at a short, but we've SFP'd this 1 hour 3 times now. And I mean, it looks like we're trying to break it now. We'll have to wait and see.
Yeah.
I don't like this wick because it messes with the RR. It's only like a 2-to-1 to the lows now, but
Yeah. So if we sweep it one more time, maybe we'll get a better entry. We'll see. But yeah, we haven't broken the broad momentum yet. The VWAP just reset, so we can't really trust the VWAP until New York session. And we only tapped into supply. We could probably come up one more time before actually completely coming down. If we even come down, you got to wait for the confirmation first. But yeah, the stars are kind of pointing towards us going down right now, based on the confluences that are stacked against us, Bitcoin. But I hate sweeps. It's step laddering, like the little step ladder sweeps, like SFP, SFP, SFP. I can't stand that. I can't stand that at all. Like, uh, you're supposed to, in terms of market structure, target when you have those sweeps. You're supposed to target the initial target of the first SFP after the final one is confirmed. But I take it in stages. Let's see what happens. I'm hoping just for a break of the low and then have a decent enough strong high for the risk to reward ratio, like you said.
yeah, I also wouldn't mind like recovering these imbalances here and coming up to like 90K to put in another 1 hour bear break. That
Ooh,
would
yeah.
that would give us insane RR back to the 12 hour target. But
Yeah, yeah.
take what we can get because there's a lot of liquidity up here, vector candles and whatever. But I yeah, I I'm not interested in this long because the stop loss would have to be at
It's a
83
yeah, yeah.
just to come up
I
to
think that
90K.
I think that the supply that we're tapping now is going to generate a range for us. And then at the range low would probably be more appropriate to prepare for those longs in hopes that you front run the break of the range, come
Yeah,
back up.
yeah, I agree. Yeah, it sucks because at the low here, it sucks that we didn't take the low on the second hit here this morning, because that would have been a nice long. I was kind of looking at the sweep of the previous week here with the golden pocket confluence, but
Oh
this
yeah.
this internal
Yeah.
stuff I don't like. I don't like. I would be more convinced that we might be able to come up here if we had taken all this liquidity from like 83, because this was, I mean, this gave everyone all weekend to get long back here and probably holding for Valhalla. So I'd really like to see, I'd really like to see
Yeah.
like 83 swept into like maybe the 786. If we come down again, that'd be pretty cool.
And we went over the weekend. Usually, there's not as much institutions, and it was during a holiday too, so that kind of like stacked it on. And we saw that we built like this rounded bottom, and then we crashed. So I just feel like retail just just got demolished from that crash last night. Um, it was nuts. But there's a lot of warning signs. We're at a Valley Area high. We had our previous point of control. We got a head and shoulder structure, Wyckoff. Like there's so many warning signs telling us that we're gonna come down. But when it comes to like moves like this, no one expects it to drop like that unless it's a super illiquid time. Um, like I guess it was kind of actually an illiquid time.
Yeah, for me it was more like the 4 hour and 12 hour SFP, and then like we break 1 hour structure, and then at that point, your 12 hours bearish, your 4 hours bearish, and your 1 hours bearish. Because like I was looking for the trade um, with this 1 hour break here at like 90,400, but we SFP'd it 3 times, and then I was away from the charts on Sunday. But we came up and put in a nice 1 hour break and then broke bearish here. That was pretty good indication you're gonna. And a lot of people in the community actually caught this short. Well, I know Barb did, which I really wish I caught that short. Man, that's you can probably hold that to 80K. That'd be sick.
Oh, dude, I caught the short from I got in on a short at like 92,489. So pretty much the top of that crash, but it I got to my target and I got out. Right? And I broke momentum, started coming against me, just got out. Um but yeah, I know that mentality of like, oh, if I stayed in my trade a little bit longer, could
Yeah.
have paid off the house, could have done this, and then you put yourself into like mental debt, and that's what usually causes like revenge trading. Even if you don't lose a trade, you can end up revenge trading because you just put yourself in that mindset. That like, oh shit, I should have held that, or um, you not holding your last trade will make you hold a trade that you shouldn't. You know what I
Yeah,
mean?
for sure.
Yeah. So it's just good just to execute your plan and understand when a continuation is possible if you're watching the screen during an active trade, or understand when it could start coming against you and why, like opposing confluences. But yeah, try not to let historical trades influence your your future trading unless it's like an actual core lesson that you think that could enhance your win rate or your profitability.
Right. Yeah, it's like the
Hmm.
gambler's fallacy, right? Every outcome is independent of all the previous outcomes, right? So you
Yeah, yeah,
you, you want to treat every trade like a new one. Uh, well, do you want to show your screen at all and show what you're looking at or anything?
sure, yeah.
Or show them where to find any of those on-chain indicators or anything?
Oh, I didn't realize people were able to see me as clear as they could. One sec here. I'm gonna get my screen share up. Share the
Oh, Alex,
screen.
dude, you didn't have to do that, man. Thank you. I appreciate it. God bless you, bro.
$100. He's dropping all of his bills on us. Um, and once in a while, he gives me a crazy tip too, and I really appreciate it every time. But he can afford it, right? Saw his P&L for the last month. Just nuts. Good job, bro. Yeah, he's a great scalper. But yeah, you guys are able to see my screen?
Hold on.
Yay or nay?
There we
Let's
go.
see.
Yeah, they can see you now.
Okay, cool. So, locally, this is what I'm looking for. We have this little supply guy right here. It kind of set the tone of what to prepare for as our range high. Whenever you have an impulse move down, basic consolidation, another impulse move down, that's a supply warning. And whenever we revisit these, you got to anticipate them to act as resistance. It's not guaranteed, but if when they come up there and you have an opposing change of character, I would listen because it's likely going to come down. Um, I like to use momentum and confluence with market structure. It's very simple. It's just a trend line, right? Um, how I define momentum to start comes from either like a low time frame or the time frame you're trading on, bullish change of character, then break of structure. During that moment, when you have the break of structure with the higher high, you can start drawing momentum. Same thing with the bearish change of character, break of structure. That's how to draw momentum. And when we break them, it's a good think of it like an alert system. You can have an alert from when a candle closes above this to tell you it's time to look at the chart because momentum has shifted. This is like the pace of the sellers. This here's the pace of the buyers. And that's what I'm kind of looking at here. When we see that it has evolved, we start to slow down. This is our broad momentum. And it's kind of like magic. I don't know how to explain it, but like whenever there's negative space, we tend to range until we hit that negative space, gets filled, and then we'll have our decision of a continuation or a decision of a reversal, or we range a little longer. I know I basically just stated the only three directions price action could go, but it's just like a really good alert system to just prepare to wait for that opposing change of character. You know that the pace of the buyers have shifted, the sellers are starting to take over, and it also is a really good ETA indicator too. So if you jump into a long, let's say you jump into a long here after the ascending double bottom break, and we kind of retested the value area high, and maybe you jumped in on the close of this candle or the close of this candle, who knows? Um, but the momentum, the moment you get jump in on your entry, you could find out, okay, like after we hit the supply, or how long will it take for us to hit the supply based on the momentum? And it would give you an ETA like 7 hours, right? We got there a little sooner, like 4 hours, but it'll give you at least some kind of ETA and what to mentally prepare for if you're waiting for that trade setup. Um, I like to use valley areas a lot. Um, it's the moment I understood valley areas was around the time I became a profitable trader. So you can use your valley area highs, your point of control, and your valley area low as core data. Everything between the valley area high and the valley area low, 70% of the active volume is here. And you kind of think of it like the market maker wants to keep this is the fairest price action, right? The market maker usually wants to try to keep it within this range as much as possible. Get in the lows of the range, get out at the top of the range, and a good way to filter out bad trades sometimes because you normally don't want to be trading within this um, when you're in a range. Or you can use volume data to help guide you into price action behavior. So, like you see this volume gap, for example, you can expect price action to move quickly between it. When you see a node of interest like this, you can expect price action to hit its head off of it or find support off of it. And they're good capital guards too. So in a scenario where like the point of control is so high in the valley area, so like close to the valley area high, then you can kind of use the point of control as confluence when you hit that break in this scenario that we're looking at right now. So if we break that low, your stop loss guard, if it's above the value high and the point of control, you technically have two forms of like guardians for your capital. But you would preferably want to have like a proper pullback and a lower low and use a strong high. And right now, this is our strong high, like way up here. So unless we like sweep the low and then pull back a little bit and then get a higher low, uh, this is where we're anticipating price action to collapse once we break below this area. Um, yeah.
So, Intriri wants to know, how do you decide where you draw your volume profiles from?
Okay, I got rules formatted for that. I got like a beginner kind of format. So um, when you're drawing this is like the beginner that I'm going to draw it for you guys. When you see like supply, right? And we have that impulse move down, change character, right? And we come up and we have another change of character. During the moment where you have your second change of character, you can pull a fib from the start of your range. Um, so that's kind of like the beginner friendly way of doing it. If you are looking for, like, let's say the opposite scenario, demand zone, pump, bearish change of character, come down, bullish change of character, you'd start like this. Sometimes the supply isn't fully mitigated. When we come up to test it, we might test the floor of the supply, like what we did here, and like what we're doing right here. In that moment, I would not include the supply in my pull, but I would include it up until the moment it gets mitigated. So we come up here, let's say we come up here tonight, and then we come down, I'll start including that into my pull. Just because like the volume data of this is just redundant information. We know it's a problem, and it could influence your value area high to be in a the placement of the value area high might not be as helpful to you when you're preparing for your setups. Because when you're trading a value area data, you could use the value area high as a key indicator to prepare for shorts, or when we deviate above it, right? I prefer deviation over hitting our head off of it, because normally your risk reward ratio is way better. And your entry confluence comes usually with acceptance into the value area during those kind of scenarios. Like this one. This was acceptance into the value area. When we deviated below it, we got a close inside of it, and then when you had your very first break of structure, this is not a break of structure on this time frame, but when you had your very first break of structure within it, that's proper acceptance. So I can then anticipate that price action is going to rotate from here to the opposite side of the value area. It's like clockwork. And the probability is really high if you have a bullish change of character occurrence just prior to acceptance into the value area, or from the above or below. Like the probability is insanely high for it to reach the opposite side of the value area. You just got to watch out for the point of control or any supply barriers along the way. But in a small range like this, the main thing you normally have to look out for is just the point of control, because that's usually where the most recent supply barrier is. Like in this case here, you'd be watching this a little bit hawkishly as we come up. But we ended up sweeping it, and now we're kind of consolidating back down. Let's see. But yeah, that's how I do my polls. That's the beginner-friendly way of doing it. So when you're able to use previous value area data, like this previous value area data right here, normally I could just use it and not need to do a poll until the overlapping data overrides this. Normally the point of control, the value area high, the value area low, ends up being in the same spot, because when you get acceptance to a previous value area, the price action behavior almost mimics the last time we were in that range. And once you have that overlapping data that kind of mocks the same kind of information as the past, I delete the past information and I just use the current, mainly to reduce noise. But
All right,
what we
awesome.
got?
So Alex wants to know how you trade using order blocks.
Ooh, okay. So I'll mark them as key areas of interest, similar to like a Fibonacci trader would, and I use it just as an extra additional layer. So there's 3 ways people normally look at an order block until on how they consider it mitigated, at least. Me personally, the moment that it's kind of like tapped, it's mitigated. But if we get a bullish change of character within it, I'm gonna listen to that too. I like to have golden pocket confluences off of them for like Fibonacci retracements. I like to see them within supply zones like we did here until we mitigated that 5-minute one. I like to see them within demand zones, of course, and just use it as stacking forms of like a layer of confluence. But yeah, tap mitigated, equilibrium point mitigation even better. But yeah, that's pretty much. There's not very much to it. I consider like what order blocks essentially are is residual evidence of residual buy orders or residual sell orders. So when we come back down to that area, and we see market structure respect that, then we know that those orders are likely filled. And majority of the time, people love catching the knife. So you will see a lot of the order blocks that are below a valley area low or above a valley area high have a giant buy or sell wall on them when you're looking at the order books. And a lot of people get those two words confused. Order blocks, order books, they're not the same thing at all. They're very, very different. But the order books tell a story of like where the limit orders are, where the confidence is. And so if you see a lot of limit buy orders on a order block, then you know that there's a large amount of people agreeing with that area being an area of confidence for um, potential longs. But even though you see the wall, I wouldn't recommend jumping in on the trade until you have your structural rules met. Like whether it be an SFP, if you're an SFP trader, or a change of character, or a break of structure. Like I'm not usually one to limit order in myself. I'll usually use limit orders as a tool of accumulation for a spot bag at key levels and stuff like that. Um, on something like Bitcoin, but not an altcoin. Altcoins, I still want to have going in on a position of strength. So even if it comes to a key level that I want to buy in, I still need to see like usually a larger time frame change of character off that key level for spot accumulation too.
All right, cool. I have a question for you. I'm just curious, is there like for the on-chain stuff, is there a like structural invalidation? Like if we break 74K on the monthly, are you is that like a little more indication that we might be in a bear market,
Ooh,
or do you have anything on your in your mind for that?
so it's 74K. So we are actually see this previous range here that we consolidated in.
Yeah.
Um, you will be surprised by the amount of people that bought Bitcoin during that. I know it kind of is downtrendy, but there a lot of accumulation occurred here, and because of that, um, and the crazy amount of people that accumulated up here too, um, when we get below around 70K, we're in a state of capitulation, meaning over 50% of holders are holding at a loss at that point, which is insane because the last time that happened was when Bitcoin was here, when we had this massive drop back in like June of 2022. That massive drop started a capitulation event for Bitcoin during that time. So at 25K, the conditions will be the same as if we were as if we came down to like 70K today's prices, which is nuts. Kind of like think of it like the bear market bottom conditions. So I don't think that we're going to come down that low. And if we do, I think it will be an amazing buy opportunity because almost all my on-chain rules will be met for buying around this area. And when all my on-chain rules are met, I usually take massive trades. Like I'll put in um like the last trade I did was 10 BTC I multiplied 10 BTC into 20 by using leverage, 2x leverage, and I was able to turn that to 40 from the last time all the rules were met for a long around 16K. And that would be the equivalent of that occurrence would occur like around here, like 64K will be at a capitulation state where I'm preparing for a daily change of character and longing that to pretty much the all-time high. But I'm kind of hopeful that this low doesn't get taken though. I just feel like um yeah, things can get hairy. We could even come down to as low as like 59K if we lost that low. The moment we get acceptance into this previous valley area, I feel like we could just go right back down to that valley area low where these daily order blocks are around 58K, and then likely get stuck range bound for a reversal after that.
Awesome. Yeah,
Yeah.
I'm kind of on the same page. I think that if we come down there, like it would be a great time to accumulate. I mean, the weekly 200 is at, 65K. So I think, 59 to 70K would be great. I'm actually curious what you think about this. If you look at the weekly chart, uh, and you look at this cycle versus last cycle, um,
So unique. Yeah.
it just looks like a fractal of the last top that we had.
Oh, I see what you're saying. Yeah. Um, yeah, it kind of does. I see what you're saying. You just pull this, it's just a smaller version. And percentage bound wise, let's see. We got from the high to low, 58%. Okay, so 36% pullback versus 58 fractal. So it suggests the movement of the next 44. Be another 20% continuation. That'd be gross. Yeah, I could see something like that, man. That just I've pulled a fractal actually very recently from this right here. The last pullback we had from like 109K down to 74K, and thought the same kind of thing. If you paste this fractal and you move it over here, it looks pretty darn identical too. Um, kind of interesting. So we could
Yeah.
wedge our way down, grab liquidity, and reverse the same way we did last time.
Yeah, I mean, fractal's only as useful as what happens next, right? I was just curious if you
Yeah, yeah.
if you'd
Fractals are neat, but uh, they're definitely not something you like front run. Like,
Yeah,
but
no,
they're
not at
but
all.
they're like they're kind of cool how they can tell you a story that happened in the past and how the story is kind of being told again.
Yeah.
But the ending is usually different. The
Yeah.
ending is usually different. The story starts the same way, but usually ends a different way. Um, yeah, it's a really cool way to use as confluence to prepare or see how things occurred in the past and how you can kind of like prepare for the same kind of sequence events to occur in the future.
Yeah, exactly. Yeah, like for everyone watching, of course, you don't trade off this stuff, but just wanted to shoot the shit a little bit because it does look. It's just interesting that it does look exactly the same around the same point in the year as well. That little summer dip and then a pump. Yeah, for me,
Actually,
it's just like for me that the weekly break of structure is what's troubling a little bit for me at the highs, kind of lining up
yeah,
with when we would expect the end of the cycle to come. But that does make me excited to hear that the on-chain stuff says we could go to 180K. That would be awesome.
yeah. The on-chain stuff is definitely opposing everything that the market structure is saying, which is gonna, which is kind of like upside down to a lot of how other people think. So I kind of get how, but I find on-chain data like the most truthful form of indicator that there is in this space because um, it's literally showing you evidence of what's actually happening in the background and not just the picture that's being painted in front of us from the market structure. Because a lot of the market structure is being suppressed. Like if you think about the like Bitcoin right now is being massively suppressed to allow accumulation for institutions. Whenever we get to a certain key levels on the Newport chart, we have these giant 3,000, 5,000 Bitcoin sell walls created on the order books, and then that usually ends up flagging our tops and putting us into like a miniature like bear market, like a really strong like pullback of like 30%. And it's wild catching it when it happens because it's not you're not usually at the charts when you see a giant sell wall in the order books like that. But I was on the charts the the last two times it happened, but not the most recent time. We had the big pullback, unfortunately. But it was intense seeing a massive sell wall like that and just making it feel like a guarantee that you could just short
Oh, I
to the,
remember that.
you know what I mean?
Yeah.
Um, you shouldn't say the word guarantee in trading, but I felt like I could just put my stop loss above that sell wall because I know price cannot pass that unless the sell wall is gone. It's just not possible. Those orders have to be filled first. So I felt like I could just put my stop loss above that and run. Um,
Yeah,
And
I
this is
remember when we came up to hits like 111K after that April low, when we first took that, there was like a 6K Bitcoin buy wall pushing us down, and that felt pretty free back when like right after the
yeah,
summer
yeah.
when we hit 111.
It's like, am I? It just feels like you're just stealing money from the market at that point when you
Yeah,
have those kind of
exactly.
situations. Yeah, it's nuts. It's a crazy amount of money, so it's obviously it's going to drive the price.
Okay, I think we
Actually,
got some more questions here.
I was gonna pull up a fractal that I took a screenshot of. Since we're talking about that, um, once in a while I'll do these like spotlight posts on cool indicators, and the fractal was one that we shared recently. Like, I don't know, this was one here that we were anticipating for it to come down to as low as 88K from the last fractal. We were just talking about this like a second ago, and it aligned up with this demand zone that we have here, that we now know has been mitigated. Mitigated, but
Yeah.
it's kind of cool how you have that. It just you see that story being painted again. Like, what if it repeats? And it almost repeated perfectly. It's nuts. Um, which has gotten a little lower than 88K, which was the low that the fractal was suggesting. And that's one of the downsides with fractals is that it's you can it has like its anchor point kind of allows you to manipulate how it's like crunched and bended and warped and stuff like that. So you got to do your best not to manipulate the fractal pole to fit your ideas, so that there's a problem with a lot of traders have is they will try to look for, especially new traders, they'll try to look for confluences that align with their idea, even though it's kind of um, you gotta what I'm trying to say is you gotta have rules in place and know the probability of those rules instead of searching and hunting for confluences that align with your bias. Um, and the fractal tool is kind of like one of those ones that could lead you in that direction, and you know you could sync it to your bias, unfortunately.
Yeah.
Um,
Yeah, I mean
but
fractals, they're useful, but I mean you got to use market structure to like justify them. Uh,
yeah,
I just think they're cool to talk about, especially if we're looking if the cycle's over or not. Uh, but if we're looking at like the fractal from the 2 week, it looks like we would bounce from here and go to like 95K and then go lower.
yeah, yeah.
Let's see.
No volume. See an alert from Alex Crypto.
No volume.
No volume.
Uh, but
No sound. Okay. Check, check. 1, 2. Check, check. Okay. Mike hears everything. Sounds good on Mark's side.
Alex had
Cool.
his stream muted. This guy. Alex, that's on your end, bro.
Okay. But yeah, I'm down with answering any questions.
Okay, yeah, we can run through some questions.
Okay, we muted Alexo Crypto.
So,
Okay, let's see if I can find these questions
yeah,
here.
same man. I'm scrolling up a bit. Okay, Bearded wants to know what like your favorite pattern or strategy to trade is.
Uh, if I were to say my absolute, so I have new favorites now that kind of just arise recently, but for the longest time it was a bullish change of character because I was kind of a one-dimensional trader when I first started for a long time. Meaning I only took longs. I didn't like shorts. I felt uncomfortable taking shorts, and that usually comes from a lack of understanding of what's actually happening in the background when a short occurs. But yeah, for the longest time, it was a bullish change of character. at a value area low, and just targeting the opposite side of the value area. But now I'm Alex So Crypto and I share notes a lot, and I've gotten into using the 15-minute posture, waiting for like a bullish change of character on like a 15-minute, and then dissecting it on the 3-minute after the change of character occurs for a pullback, and then using the golden pocket 786 level as a key level this is all after a 15-minute change of character occurs, so you know like things have flipped bullish on your side. And yeah, I'll take the 3-minute pullback, bullish change of character on like a low time frame, like the 3-minute, jump in on that to kind of give myself better risk to reward ratio. Just the only downside with that is just you got to watch the 15-minute unclaimed high that just was created from the change of character pullback, as a potential barrier that could prevent you from going any further. It's just a really easy way to enhance your risk to reward ratio if all your rules have been met and the risk to reward ratio is not there. Those pullback golden pocket entries are freaking awesome. It's just like normally when my opportunities would be cut when because I listen to risk to reward ratio. Risk to reward ratio is always my final rule. Like when all my rules have been met, R&R needs to usually be at least a 1 to 2 or greater. So that way my wins will always outweigh my losses and allow me to scale like a decent pace. Now that risk to reward ratio rule is not something that's set in stone. Like you can go for 1-to-1s, but I just prefer to go for 1 to 2 setups. So if I have to get out around my 1-to-1, like with opposing confluences, then I still get at least a 1-to-1 out of it. 1-to-1 setups are usually good for those who have high win rates. If you're like 55% or higher kind of thing. But you'll usually get a heck of a lot more trade opportunities with 1-to-1 setups because they're everywhere. They're everywhere. But yeah, that's kind of like my picture perfect kind of setup. Now, if I were to be even more detailed on that, like the change of character, when it occurs at a bottom of valley area, I would like to see the VWAP, us close above the VWAP or the VWAP being below us. And the minute, like maybe if I've entered along that the supply has already been mitigated so that there's a chance for a continuation past the range that we're in, that would be even better. Like catching the low of the range to get out, not out at the top of the range, but from a continuation into a new one. But yeah, that's kind of like what I usually go for.
Yeah, I would agree.
Um,
I think that and 4 hour breaks as well.
oh
The
yeah,
same
yeah,
same
4 hours.
strategy.
Yeah, 4 hour for me is a bias time frame. If we're bearish on the 4 hour, then I'll focus mostly on shorts. But I really like front running the 4 hour changes of character because that usually what evolves your scalp trade into a swing trade. You just got to be careful where your stop loss guard is. That's all.
Yeah, I like 4 hour structure events with like a 1 hour entry a lot.
Oh yeah, yeah.
Yeah,
Like
so
multi
kind of
time frame
similar
confluences.
to your exact
Yeah,
strategy basically on the 15-minute, but I like it on the 4 hour as well. I
yeah.
would say the JPAL is my favorite setup, but I would say those are close second as well. So I like that. Like that you like that. JPAL to me is just like SFP and then opposing break of structure. Found that most
Okay,
success
I
with that.
gotcha. Yeah, nice. I like the name of that.
Yeah, it's because it prints, bro. Call it Jerome Powell because it rolls off, or
Oh yeah,
J Powell.
Prince.
It rolls off
Okay,
the
that makes
tongue.
sense.
Yeah, it rolls off the tongue
Yeah,
better than SFP break of structure. If I'm just saying that all stream, so we coined that
yeah.
phrase.
Chapow.
Okay, Alex wants to know. Well, we just kind of went over this. What's an A plus setup? But how to use order books.
Oh, how to use order books. Luckily, this is an easy lesson, but pull it up here. So I like to use Coin Glasses order books and not the exchange native order books. The exchange order books, you should look at them before you enter, just because it's also the place where you're going to find out the mark price versus the last trade price, and that kind of defines your slippage. So you need to know what your slippage is. But here's a really good example for a lesson. So we have this is a buy wall, a very big buy wall. Um, so what you look at, you see this is called a depth chart. This is a representation of the orders that are going on in the background. And on the left-hand side is the actual order book. But this is just the pretty picture painted to describe this order book. And the story that this order book is telling us right now is that there's a massive amount of interest in 86,110. When we get there, we need to have a total amount of 2,400 Bitcoin bought before we even get there. But when we get there, there's a wall the size of, you see how it jumped from 2,400 to 4,700? So that basically tells us that we have like over 2,300-ish Bitcoin ready to be bought in that one spot. So this is likely a market maker trying to induce support just because of the size of the buy wall, or try to induce undercuts, which is like retail trying to undercut them to get in before they do. And once they have their undercut value met, they might do what's called an NTIF, stands for non-intentional to fill. And that's when they pull their order when they have enough like undercuts met. So they can use retail as a tool to induce the bounce instead of their own funds. So this is an area where if you're in a short, you'd have to be super cautious that could bounce at this area, because it will very, very likely bounce off of this or go range bound for a long period of time until it breaks. But what's nice about order books is you can watch it happen as we get there. So when we tap it the first time, you'll see maybe 200 Bitcoin filled and we see a little tiny bit of bounce, and we go range bound for a long period of time. Like a really cool indication of knowing when to look at the order books is right before a trade. Think of it like looking both ways before crossing the road, right? You don't want to be jumping into a short, right? Knowing that there's a giant buy wall, like literally right where we're planning for our short right now. So it's a little annoying. So we know that we need 2,000 Bitcoin to fill before we can even break down below our level that we've got marked. Thanks to the order books, we now know that, right? But what else could I tell you about the order books? When there's clearance in the order books, they're not as common, but let's see if I can find any clearance in here. Clearance is when you see the kind of the opposite of a wall occur. Are you guys able to hear me?
Yeah, they should be able to.
Okay, you can hear. Okay, I just got quiet, so I just want to make sure. But yeah, clearance is when you see how there's like these kind of looks like staircases coming up. Clearance is when you see the order books kind of look like this, where you have, this is your depth chart here, but there's like a flat level, like a flat line level, and then we start seeing come back again. This is going, I guarantee you, if we close above a level like this or below a level like this in the order books, that you'll see a fair value gap, a nasty fair value gap, because it's going to tell you the price between the moment where the lack of interest starts to where it ends. And the fair value gap will usually be that size. Like it's literally telling you the size of the candle, because we'll have what's called an illiquid move, because price action usually teleports to the next ask or bid order. And then you have moves like this, illiquid moves, where there's like no buyers here, but there are some here, right? So that's a part of the reason why supply becomes a problem, right? So those buyers got in there and they're trapped. So trapped buyers or residual sell orders become a problem when we get up here, and those buyers want to get out, right? They've been holding at a loss for so long, and they just want to get out. So those buyers become a part of the supply issue. I hope that helps you out, but that's basically how you use the order books as a tool. Look both ways before crossing the road and seeing if there's any barriers along your way. If one really good spot to watch for order book confluence is always your trend lines. because the order books usually trail and follow the trend lines. And it would always be right above or below the price action. So right now, right below us, the trend, our momentum trend line is pretty much in line with that order book buy wall. So we know that there's buyers kind of basically honoring this trend line still, or at least roughly around the point of control, right? So when you're waiting for a break of a trend line, let's if you're using trend lines as your part of your rules, like order books are gonna be your best friend, because they'll tell you when your trend line's not going to be honored anymore as support or resistance. If there's no wall there anymore, there's likely not going to be anyone to induce that point of interest as a barrier anymore. They're very, like, order books are really, really, really helpful when you're trading ascending or descending triangles like this, because they're normally created by a giant sell wall for ascending triangles and descending triangles, giant buy wall holding it up. But the story is basically the descending triangle is that the pace of the sellers are starting to catch up with those buyers, and then a big decision has to be made at the apex point. And usually the winner, the side that determines the break, is either defined by the giant buy wall. If it hasn't been mitigated yet, it's going to force a break to the upside, or whatever side has the most liquidity usually wins. And then we go after that heavier weighted liquidity in those breaks. But there's so many ways you can use the order books. So I highly recommend everyone to learn it, because it syncs with every existing strategy in the entire world, unless you're automating your stuff, and can't really sync the order books with that. But you could, but it'd be a really convoluted tool.
So, or another question here. They want to know, how do you develop your rules for your strategy?
Oh yeah, so it's the most tedious thing you could ever do as a trader, but it's one of the most important things you could do. Um, you'll need there's a couple ways you can do it for free, of course. You can use Trader Edge as a tool, and you can just log. The very first thing you want to do is you create your first layer, right? So right now, I'm building an SFP strategy. What are the best SFPs, right? So you can take every single 15-minute SFP, and because of my back testing, I know that you'll have like a 43% win rate if you took every single SFP. Now, the profit factor is a separate thing altogether, but your hit rate to hitting the technical target of an SFP will be about 43% on the 15-minute time frame, because that's where I'm currently building it right now. So that data I just told you, just 15-minute data. And then what you do next, you know that probability, right, of the SFPs, and then you add a layer. So, for example, a layer you could do is an SFP while being at the top of a value area or below a value area. How much would that increase my win rate? And then you back test all the exact same SFPs you took, but with the value area data overlapped on top of it. Or maybe you want to back test SFPs after hitting the VWAP. Or maybe you want to back test SFPs after, let's say, the MFI reaching the 70 level or the 30 level. That's like layer one. You get another indicator plus the structural rules, and you find out your win rate from that. And I can tell you from the MFI rules, it will decrease your amount of opportunities by close to 60%, but it increases your win rate from 43% all the way up to 70%, just for that one MFI rule. And then you can take another step further and add another rule and another rule, but eventually adding too many rules ends up reducing your amount of opportunities so far back that it's actually like worth it to have a lower win rate in exchange for more opportunities. So I'll log every trade. I'll mark it as a win, mark it as a loss, write down the risk to reward ratio so I know the profit factor, and write down the dates and stuff like that so I know the frequency of the trades. Because if you're doing this for a living, you need to know how many times that opportunity is going to occur so you can gauge like what kind of account size you need in order for you to be able to pay for your bills and build savings and all that kind of stuff. So I hope that helps you out. Kind of like a verbal explanation of it. It's a lot easier to kind of show the screen and share like that kind of stuff, but you kind of get the gist of it. Layer one, I usually recommend market structure. Like, do you want to jump in on trades after a change of character, or an SFP, or a break of structure, or a flip? Like that's completely up to you. And then you add your layers after that. The very, very first time I ever back tested something was the double bottom. I took 3 years worth of trades in a single afternoon. And that's one thing that backtesting does for you too, is gives you years of experience in like a single day. Ask Kyle how to hold trades overnight without checking your phone. Yeah. Well, that's alarms, man. You gotta get your alarm set up. So so one thing that's kind of tedious that I do is I'll have an alarm set for when my key level breaks, so I know when it's time to enter a trade. But I'll keep the alarm going. So if I hear the alarm again, I know it's a bad thing. If I hear it again, I know it's a good thing, bad thing, good thing, bad thing, good thing. And I'll just keep track of it in my head in a weird way. So I don't actually have to like physically go to my computer screen. I can tell by like the alerts that I've chosen. Like this is a bad thing. You can have like a storm sound, because like TradingView allows you to customize your sounds. You can have a certain sound for a certain level, so you know exactly where the price is at the time. But holding overnight trades, I understand the emotion behind that, because I used to do that all the freaking time, and then it messes with your head, even your dreams. You end up dreaming about the charts, and it's usually a bad dream. So, yeah, I normally would recommend, like, if you have breathing room, you stay in your trade, put your stop loss at break even or beneath the most recent strong low or above the most recent strong high, and then trail it based on percentages from there. Unless you're in a swing trade, you don't always want to have it trail based on percentages unless that gap is really big. In a scenario like that, you kind of want to keep it where your strong low or strong high is, and then when you wake up in the morning, you can adapt your stop loss if you need to after that.
And what's your favorite altcoin to trade?
Um, that that answer changes so often. So
Yeah.
I usually recommend people to focus on the higher market cap stuff. So I constantly recommend people to do it. I do it myself. So I'll focus on like Solana the most, or Link. I like Link because it's a good range traders asset. I like Solana because it's a good SFP traders asset. It loves SFPs. Um, so I'll audit the chart of an altcoin. I'll look at not its market cap, but its liquidity pool valuation, because that's the true market cap of the asset. If you're looking at something like Pepe with $1 billion market cap, we all know there's only like $250,000 actually in the bank, right? So I'll know how big a trader needs to be in order to control the price action. And if the liquidity pool is like under, I'd say like, I don't know, $4 or $5 million, I usually won't touch it. Um, but yeah, to answer that swiftly, sorry, I would say Solana, Chainlink, Energy Web Token used to be my best friend, because that's where I learned how to trade ranges with Energy Web Token on KuCoin. And Ethereum's a good one because there's always liquidity entirely encased around the price action. So Ethereum's a good one to recommend. And Ondo's a really good range traders asset too. I had to look at my watch list just to remember my primary trading things, but
Yeah, but let's be
Bitcoin's the
honest,
boss, man. So
Bitcoin is what everyone should be trading.
yeah, like, and if you're not trading Bitcoin, you should have Bitcoin chart open 24/7, because it's going to influence your altcoin trade. So if you're jumping in on a long, for example, you got to make sure that Bitcoin has the same kind of bias, and that when it confirms its break, Bitcoin's break, the altcoin usually will follow it. And I recommend alts for trading if you are, let's say, for example, you do TA over the same 10 assets every single morning. You pick the one trade that has the least amount of barriers, the best risk reward ratio, and the better probability of hitting the target. And then just focus on the high quality setups and not just race towards every single setup that you see. Um, that's my recommendation. Like when it comes to alts, your
Yeah,
stop losses are less likely to be honored. There's less liquidity. There's more slippage.
that's
And
what
there's a
I find.
CEO.
Like
Yeah. If it,
with alts, like I will trade an altcoin if it's like an amazing setup. Like we just swept like 12-hour, 4-hour liquidity. It's a 30-minute break of structure back into the range, targeting the golden pocket. Like those kind of setups I
yeah,
love.
yeah,
But a majority of the time, like Bitcoin, because like when trading, all you're really looking for is risk to reward, right? And that's what a lot of people don't understand is like the percentages can be higher on an altcoin, but if the stop loss is a higher percentage too, if you're risking the same amount of money, you're making the same amount of money. So it has to
yeah.
be really enticing setup for me to want to trade an altcoin.
I hear you. Yeah, I agree, 100%. Um, Someone had a question: what is the best time to trade? Uh, I would. That's situational. But if you're someone like me, I would say between 9:30 a.m. Eastern when market opens, a New York session. I would just basically just say the New York session and then stay away from the New York session, London session mix when those two sessions overlap each other, because you have two market makers that usually induce a range. Um, they don't like to compete. But yeah, I would say yeah between 9:30 a.m. and like 11 a.m. There's also the silver bullet period between like 10 a.m. and 11 a.m., which is good too. If you're a burst trader, maybe the Tokyo session is a good one. Check that. You can do that. Um, but yeah, based on your strategy, the cool thing is when you do back testing and you're logging the time you're jumping into those trades, you're gonna find out your best window to trade that strategy as well. So you can answer your own question based on your rules for entering as well. Um, what is the best window? Because you can actually like isolate bad trades too by like cutting out the bad hours, um, even if you're using the exact same rules. But I normally I'll tell you the best time to trade, but you're as a trader in the crypto space, you're kind of like you're trading like you're on call. You're always on call for work. And when your rules are met, your rules are met. You take it. Um, but if you don't like taking trades in the middle of the night or if there's no liquidity, then I would just use that as a sign to an indication not to take the trade too. Um, but I know I'll likely take this short so long as I'm awake during the confirmation. Oh, Knight's holding a short from 3,700. Good job, man.
From yeah, 3070.
Should I close my position now or hold it for my target to 2,600? Let's take a peek at Ethereum. Um, and I do gotta go soon.
Yeah, that's cool.
Pull. Let's go to the daily. So you jumped in at 3,040 and you're targeting 2,000. Oh, good job, man. That's great. That's a good target. Um, we breached below the previous point of control. Let me just zoom this in. And we bounced off the previous value area high and helped induce this bounce. Got our supply, grabbed the liquidity from above the supply zone here. And it looks like Ethereum kind of followed along Bitcoin really well. But this was a lot more picture perfect for a short than Bitcoin was. Um, double distribution in the previous valley area. Meaning, like, think of it like there's two strong ranges within the valley area, and price action moves quickly between them. We bounced off of this volume node as a form of support. We're coming into supply. So I personally would be holding your trade because we have this big barrier that we haven't even mitigated yet. We just tapped into here. So it's suggesting that we should be coming down. Let's zoom in on the 5-minute. I got this launch thing set up with my Ethereum, so I gotta fix that. Yeah, right now with Ethereum's posture, if we break this key level right here at 2,784, we're likely to come right back down to at least retest this previous high. We got to pull a fib from this low to this high. And we can see the previous high is in line with the golden pocket. So around here, if you see a bullish reaction, you could think about taking some off the table, and that's really close to your technical target. It's only about $150 off. So you see an opposing change of character here. It could induce an ascending double bottom. If we break that neckline, then we'll start coming up from there. So your stop loss placement, I would recommend like 2,854 around here. This is where I'd put it. If you want really like a lot of extra breathing room, then above this supply zone, because we got like 3 stack supply zones here within this little regression trend. If we
All
close
right.
below the low, then you're going to your target, like right after. There's not much keeping it up after that. Maybe under this low here at 2,700, could grab that liquidity and induce a bounce, but we're back to Bitcoin.
All right, awesome, bro. Well, for people that are interested in finding out more, man, is there anything you want to plug?
Plug. I'm not great at plugging, but if you, yeah. So I have with Investor Share an amazing community, just like you do, man. And your membership comes with 3 really big courses. We usually recommend people start the mindset courses first before the. We have like a 30-day technical analysis course where day 1 you're starting from the absolute basics, and by the day 30 you have learned 5 different trading strategies, and we post signals every day, all that kind of fun stuff that you normally expect from a Discord server. We just make sure that everyone is safe as possible with their trades. That's one thing that we really stress all the time is consistency, safety, and you're allowed to poke me as many times as you want with questions because that's what I'm there for. Whether you're in the community or not, you guys can message me if you're struggling with something.
All right, awesome, Kyle. Well, thanks for coming on, man. I know you got to get going, so I appreciate it, man. It was fun.
Yeah, it was a lot of fun. I haven't done like something like this in a while, like over a year, where I jumped on someone else's YouTube channel and just hang out. I gotta do this more often.
Yeah, man. Well, you can come back anytime, dude. That was fun.
Very cool. Yeah, man. All right, cool. Thanks, guys. Appreciate it. Thanks, guys.
All right, man. I'll see you later.
See.
All right, guys. Awesome. So, how was that? You guys enjoy that? All right, awesome, guys. Well, just quickly looking at. Oh, hold on. Oh, my chat just crashed. Sorry, guys. I'm back. All right, so just quickly running down on Bitcoin. So similar to what we were looking at earlier on the stream. This is ETH. So Bitcoin has SFP'd this high again. If you want to see higher prices to come back in and attack some of the liquidity in here, we got to break this 1 hour. We're getting pinched between the uptrending momentum here and this high that we can't seem to break. If we come back and break this low here, we're looking at like a JPOW on the 15-minute as well as like the 20-minute, as well as not on the 1 hour, not 30-minute either. But we're looking at a lot of SFP breakup structures combined with multiple 1 hour SFPs. We would be generally targeting the low. The problem that I have with this setup here is that it's only going to be like a 2 risk to reward versus before when we were looking at the position before it was like a 4 risk to reward. So it's a little less appealing for me here. It's on a risk to reward basis. If we break this low and then we get like a pullback, I'd be more interested, somewhere around like a 3 to like a 4 risk to reward. So you may wait for a little bit of a pullback for an entry, maybe an imposing break of structure there to get in. But if you want to see if we're able to close a 1 hour candle above this and break 1 hour structure, I would much prefer the short coming up here, rejecting off of the supply and getting a 1 hour break of structure up here. The reason for that is it's just a much better risk to reward if we're running down to like back to these lows and then ultimately to 80K, leaving a runner. That would be pretty awesome. Seeing this kind of stop out all the guys that FOMO short in here and then reject off supply. That'd be pretty nice. Over the weekend, so we talked about how we had that 12-hour SFP into the 1 hour break of structure. Kind of talking about what Kyle was talking about. We also just had like a simple momentum break from the lows up here as well. Could have caught this. But I'm not going to do like a full breakdown today because I know we've been going for a while. So just quickly, do you guys have any questions for me before we end this thing here? We're really not looking for longs until we come back kind of into the discount of the range and get some sort of break of structure if you are looking for that. Or if we break the 1 hour here, we can get a pullback. That would be nice. Or break the 1 hour and start creating some structure. I do like that we swept the previous week's low here. So in kind of the Sunday market pulse that I posted for you guys, I was talking about looking for longs down here off of like a 30-minute structure break after sweeping the low. We were lucky enough to get 1 hour here, right? But no longs here unless we either break 1 hour or we come back down into discount. But really, I'd like to see 1 hour break before we get long. Otherwise, I think we're coming lower. I really like I was talking with Kyle, I really like a break of 83.5 into like this 786, stop out all the longs from over here. So if we do come lower, maybe we get like a 30-minute here. I would take that for a long. Otherwise, I'm just kind of looking for continuation shorts down. Oh, nice. We broke 900 subs, guys. Awesome. Cool. Well, this has been a long stream. I appreciate Kyle coming on. If you guys are new here, make sure you subscribe. Make sure you ring the bell. Join the free Discord listed in the description. And as always, guys, my name's Wave Cipher. Much love. Trade safe. Wave Cipher out. See you guys tomorrow.